future, and its name is Marko.
Welcome back, everybody, to another show of Hoot Loot, a Hoot Entertainment production, Markonomics 101, and today's show is going to be unbelievable. You are going to hear stuff that you'll never hear on the lamestream news, the leading cause of mental illness. And I'll tell you, I sacrificed for you guys. I had to watch some cable news, and I'm still getting over the Tourette syndrome that it cost me. Okay, I'm fine. Don't worry, I'm fine. I'm medicated. All right. So in any event, this is the place where you come to be informed, be amused, never be misled. And in fact, I am willing to put up $1,000 if someone can watch any show and show that they have been misled in any way, shape, or form. That doesn't mean that factually I was incorrect, but I want someone to prove that I actually lied or misled people for some purpose. You will not find it, but I'll put up $1,000 that says that you can't. All right, and I know y'all need $1,000 because everybody's broke. In any event, today's show is called Breakout or Fakeout. Last show we did, the one about stupid stocks, revenge. We talked about there being a slight rally coming up and that maybe it had hit an intermediate bottom of some kind. We didn't know where the thing was going to go. We have a little bit of a knowledge of that right now. Was it a bottom? Was it not a bottom? You listen to CNBC and you get more Tourette's like me, you think it's a bottom because they all do. They always do. Buy, time to buy, it's all cheap. But in any event, you are in the fact zone, so you are only going to hear facts. And same fact time, same fact channel. Thank you for all the new subscribers that keep coming in and pouring in. And please leave your comments, even if you think I'm full of it, which most of you do. I'd love to hear why. And I'd love to hear that, what you like, what you didn't like, what you want us to cover. With that, we're going to be right back with the charts. Welcome back. Now you're going to start to see some amazing charts. And, of course, we're going to start with cryptos again. Even though they've died, they've been buried, I've tried to kill them, I've stomped on them, you name it. But we're going to start with Bitcoin. Now, you notice that it had a rounded bottom. We talked about it in the last show. And it sort of looked like it was ready to cease going down. We didn't necessarily think it would go high, but we said 22,500. If it exceeded it, it would be positive. It did go a little bit above it, but it really hasn't had a lot of follow-through. If you look at this, this is not the way a crypto would act if there was that mania going on with all the crypto zombies out there that can't get enough crypto that are hooked on it. So, the next chart is ARK Innovation. And ARK Innovation is, again, the poster child of stupid stocks. Kathy Wood, who runs it, is absolutely a genius in some ways, if you think about it. She has created an entire sector of stupid stocks, of dumb stocks, and she continues to invest in them. People continue to pour money into the fund, despite the fact it loses money all the time. I mean, it's now at about like 10 billion. If she hadn't lost all that money, it'd be at like 50 or 100 billion. It'd be one of the biggest ones there are. But in any event, it was making a nice little consolidation move. It's starting to look bearish to me. I'm not sure. It's poised. I put poised for a bear market rally because it might. And you never can tell when the market's going to do something. So I don't want to rule anything out. But right now, I'm leaning to the fact that the market is actually going to come down and that we're about at the end of this bear market rally. That's what I'm leaning to right now. I don't have solid evidence, but we have some. MicroStrategy, the stock that I love to make fun of because of Michael Newtown Sailor. Vindication time. He's going to start bragging about how Bitcoin now, he's vindicated, it's going to go to, $1 million a non-existent coin. Sorry, pal, it ain't going to happen. You're going to end up with egg on your face all over again. That's just what you get when you invest in stupid stocks. But it has made a nice little bottom. Big deal. You've lost all this money holding this thing, and it's gone up a little bit. Okay, good. Better than nothing. Tesla is really, this company is ruled by insanity. And Elon Musk, Elon the Felon, as I like to call him, the guy needs to be psychologically evaluated. He is as close to insane as I am, and that is insane. Okay? I'm at least sanely insane sometimes, but this guy is all over the place. He thinks he's going to go to Mars. He thinks he's going to go to the moon. He thinks his cars, he doesn't have full automatic driving and never will, because there's a bill in the Senate. It's being pushed really hard, and he's not going to have that. Plus, he's got great competitors. Volkswagen has the Cayenne, they have Audi, and they have another one, a Porsche one, that are superb. They get top ranked every time, and they are coming on strong. They're going to surpass Tesla. They're going to be the first. Mark my words. And it's also in a massive, either head and shoulders or a rounded top, and it just doesn't look good at all. I think this thing is so overvalued. It has so far to go down. And you're going to see some interesting stuff going on in motors today that I'm going to show you. So let's go on to the indexes. And the Dow, it looks like it's in kind of a flag here. It may go up to about 34,000 is what I think to the top of the trend channel. But this thing is not ready to break out. I mean, it really is not. This is a fake out move, not a breakout. It still doesn't have the oomph to get there. It was down big today, and it just doesn't have it. So we're gonna say fake out for now, and go on to the Nasdaq 100. Now the Nasdaq 100 is probably the best looking of a lot of them, and as you can see, it's made a short-term rounded bottom, which is positive, but it's very short-term. That means it's not going to go very far, based on this. But if it does break that green line and it goes above 13,000, it has a little bit more room to go up. How much room does it have? Not a whole hell of a lot. The markets are not going to get more expensive than they were. And the reason that they're getting some kind of buoyancy here is that interest rates have been coming down. That's about to end too. And we're going to show you why, because there's a big thing going on in oil right now that you probably don't know about, but you're going to want it. The S&P 500 also looks like the Dow here. If it breaks 4,300, then you have to question whether we're in a bear market. Okay? In other words, it can't really break 4,300 and then still be considered in a bear market. That would then cause question. You always have to look for what can go wrong and make your thesis not correct, and that would make the thesis not correct. I don't think it will do it. I think it's already hit the top as of today or tomorrow. It's pretty soon about to, if it hasn't already. The earnings have come out. They've been supposedly great. I don't know how. That's because I guess they're inflated. They don't really take inflation into account or something. And, let's face it, accounting is not exactly a science. It has a little wiggle room in it, if you know what I mean. Okay, the small cap index also, it looks like this rally's over. Now, if it breaks through that declining trend line, we got to start questioning things, but it doesn't look like it for now. Finally, the Dow Jones Transportation Average, it also looks like an aborted rounded top, but again, I'm going to say neutral here for now. It does not look like the kind of rally that would occur if this was a bull market. There would be much more ferocity to it, and we're just seeing things just kind of creep up and not really go anywhere. Now we're going to go back to Bitcoin because we're going to start talking about cryptos. And, I was thinking about a cartoon show they could do about cryptos, and I thought of a great theme song. Cryptos, meet the cryptos, they're the money-losing family. Not a good investment, but a great way to scam your family. Anyway, I thought it was a good song. Maybe you guys don't like it, but it's going to make a great cartoon show, especially for all of you people that have lost all your money in it. We've talked about it going down to 20,000. It did. It bounced a little bit, but it really doesn't look like it's going anywhere. All right, so we're on to Ethereum, and Ethereum is done a little bit better, and Ethereum is very important for one reason. It has a major support resistance at 1750. When it broke 1750 on the downside, we said if it breaks 1750, watch for it to the whole sector's coming down with it. Well, I'm going to say the same thing. If it breaks above 1750, we got to start looking at the fact that maybe insanity will have taken over the world a second time. And who knows? There's nothing that you can rule out in a market, really. I mean, we could see Bitcoin going to God knows what number, but it won't. But we could see it. It still has a chance of happening because people are crazy. Let's face it. All right, now here's Ethereum for 5 years. Again, it shows you that, it's had that nice little bounce up to right about 1750, which is what we predicted, but it hasn't gone through it. Now, Ethereum will go through this, if cryptos are coming back. But they're not coming back. I don't believe that for a minute. People are starting to realize what's obvious. Bitcoin is a password. Bitcoin's a password, a password, a password, a password. It doesn't exist. It's phantom. It's a mirage. It's a big Newton of your imagination. All right. Now, this one is Grayscale Bitcoin Trust versus the underlying asset, which is Bitcoin. This is supposedly an ETF-like holding company, and it's existed for a long time. Now, one of the things we pointed out, and I wanted to make it simpler this time, is look at how much Grayscale has lost, okay, while Bitcoin has gone up in the same period of time. So you've lost 50% in Grayscale. You would have made 20% in Bitcoin. How well does that track? Where does the money go? And you know where it goes? It goes, among other things, to excessive fees, all kinds of fees, and it goes to Coinbase, which is the custodian and charges another layer of fees. Now, if you think about it, Kathy Woods and ARK owns Grayscale. So not only does she have her fees, she's got Grayscale's fees and Coinbase's fees and God knows what other fees, but that's why her funds don't do well, because she's not acting fiduciarily and trying to get those fees down, at least not that I know of, because these things are eating returns alive. They're churning them. Basically, what's happening is all the trading is churning the money away from the actual investment. And it's not even an investment, because all people do is trade them. They don't use them for anything. They have absolutely no use. Here's again, a stupid stock I mentioned last week that looked pretty good. You know, the 27 carcinogenic chemicals that, will grow you a third hand and, a fifth leg or something like that if you eat too much of it. But, it's kind of had a little bit of a rounded bottom, but it's not gone very far. And again, very little follow through. This is not a sign that we're moving very far. It just is not. I also mentioned Lucid Group last week, one of the EVs that looked okay. And look at that, no follow through. Even as a matter of fact, it looks like it may just break down. Okay? EVs have not caught fire. I'm going to show you a great example coming up. Netflix, another stock that became a stupid stock, and it's also had a great pattern. It's down like 75% and barely rallying at all. A lot of these companies have gone up simply because earnings came out and they weren't as bad as they thought. And earnings are subject to a little bit of a interpretation. Now, NVIDIA, I put this up here for a reason. Fancy Nancy Pelosi, she is the number one stock trader of all time. Let's face it, she is just the bomb. Now, she happened to be going to Taiwan this week. She's in Taiwan right now. Do you know what else is in Taiwan right now? Taiwan Semiconductor, the best, the most advanced semiconductor company, I think, in the world, and a bunch of other electronic companies just like it. I wonder what kind of information she's going to get by going there. I think she's going to get some trades done. I don't know, but the Chinese are awfully pissed, and that will bring us to our next point in a minute. But Fancy Nancy, she's going to have lots of investment ideas, so follow that Congress tracker so you can see what she'll buy. The CRB index of commodities. These look like a little bit, they've stopped going down, and the reason is not food. Energy has stopped. Energy looks like it's rebounding. And I'm going to try to explain to you why, because it is clearly not obvious as to why this is happening. Gasoline is, has gone down to critical support, 290. That's where it's staying. If I looked at this graph, just this chart alone, I would actually think this is really bearish. Now I'm going to show you some stuff that tells you that this is misleading, and I'm going to explain to you why it's misleading. And there's crude oil. Looks the same thing. Looks like the same thing. I would guess it would break down, but I'm going to show you something that will tell you it's not. Natural gas looks like it made a double top, but it's also going back up. So energy is actually starting to perform well in certain areas and is starting to lead the inflation back. Inflation, which started to quell, is back, and we're going to show you some charts about that. Now, unfortunately, we're going to get a depression and inflation. How's that for good news? Woo! I'm going to ring a bell for that. And as a matter of fact, Nancy, I'm going to ring one for Nancy's. Vote out the incumbents. Vote out the incumbents. That's all I got to say. Make America laugh again. We have got the biggest pile of crooks, and just the fact that she's in Taiwan, getting inside information, doing her thing, and just thumbing her nose at everybody else. All right, oil services index also. These are the drillers. They're now starting to drill again. So, there's now the thought that oil is going up. And the big oil index, these are the stocks. These look better. And when you start looking at some of the individual companies, they're doing well. A couple of them have broken out like crazy. And that tells you that there's a lot of strength, that investors are looking through something. And here's what they're looking through. We have something called the Strategic Petroleum Reserve. Okay? That is for reserve storage of oil for an emergency. Now, you don't store oil to change the price. Okay? That's what Biden has been doing. It was 700 million barrels of oil were stored, and the only reason we ever withdrew it is for disaster relief, because it was there and close to where disaster occurred. We've never, now he's signed a bill for 1 million barrels a day to come out of this, which means that by September we'll have 385 million barrels left. And you know what you need a strategic petroleum reserve for? War. Oil is your most precious resource in a war. Everybody runs out of it. Everybody needs it. And why would you disarm? Why would you possibly disarm this country? Because if we have some kind of skirmish that's on our shores, okay, that's here, we're not going to have the oil. Because that'll run out really fast. That right now, the 1 million barrels a day is like 5% of our consumption. So the price of gas is going down much more, but the oil companies and the investors see the future, and the fact of the matter is, without a strategic reserve, there's even less supply. So it becomes even more valuable. And that's what I think is going on. Why we would do something so stupid is only because the government is that stupid. They are so dumb it's not funny, and basically trying to knock the price of gas down is nothing other than a covert effort by Mr. Biden and his administration to buy votes. That's all they're doing. They're not helping us at all. And, changing the price, knocking it down by, a buck or so is not going to change anything until you produce more. That's the problem. And he does everything in his power to keep it from being produced. All right, Chevron. This is one that Warren Buffett bought. Look at that. It broke out of its little short-term rounded bottom, and it's looking pretty good. It's actually gapped up, and this one right now I think is actually a decent speculation. I'm not going to say buy it, but I'm going to say that this is one of the places you ought to be if you want to buy so badly. And Warren Buffett has bought, I'm going to show you Occidental. Look at that. Warren Buffett bought this. Mr. Sociopathic Grandpa, as he was called by Peter Infant Thiel, the guy who runs Palantir, whatever the company's called. And it's gone to practically zero. But he insists that Buffett, who has avoided buying stupid things like cryptos, is a sociopathic grandpa because he missed the train. He missed losing all that money, and what a pleasure that would have been to miss out on that, right? Warren Buffett has absolutely proven himself to be the best investor long-term that I know of, and Peter Thiel is about the biggest idiot I've ever heard of to call him a name like that because he didn't make a mistake as stupid as Peter Thiel did. Peter Thiel is also an associate of guess who? Elon the Felon Musk, who is into EVs, he's into crypto, he's into just about everything that's scammy. And, that's just the damn truth. ExxonMobil, look at this one, another breakout. With 3 major oil companies breaking out, okay? These do not look like bear market rallies. These look like a new leg up. So we'll see what happens here. But the oil companies are performing better than oil or gas as a commodity because of the Strategic Petroleum Reserve and the letting out of 1 million barrels a day. The dumbest thing I've ever heard in my entire life. Vote out all the incumbents, make America laugh again. And the only thing that's going to make me laugh is voting out all the incumbents. We got to get rid of them, and especially Nancy Pelosi. If you live in San Francisco and you're sick and tired of walking downtown, stepping into feces and methadone needles, you have her to thank for that. Okay? You have her to thank, and if you vote her back in, you deserve it. You deserve it. And she needs to go today. She's committing treason okay, by going there right now, because one of the things I'm going to speculate, I am not going to say this is happening, but here's my speculation. There's an issue between sovereignty of Taiwan and China. We all know that. There's a threat of a war. The war, Russia-Ukraine, has not gone as well as the news reports, because, of course, they don't tell the truth. Now, China sees this, and now they're really threatening a lot of stuff. So here's the solution that makes sense and fits perfectly. I don't know if this is what's happening, but not too long ago, maybe 30, 40 years ago, Britain used to own Hong Kong, and they gave up ownership of Hong Kong, let Hong Kong be a separate entity and continue its capitalism, and now China's supposed to take it over in not too distant future, and the place has gone nuts. I have a feeling that Taiwan is going to become one of those 50-year giveaways that prevents a war, makes the idiots in charge look like geniuses, when in reality what they're going to do is they're going to give away incredible technology to the Chinese, which they already steal it all anyway. And Taiwan has the best chip technology, and Nancy gave them or helped them with $50 billion because they don't make enough money. Isn't that amazing? They talk about, how companies don't pay enough in taxes. Well, here, these companies make money, and you're giving them $50 billion in support? Gee, that makes sense. Pioneer Natural Resources is the largest shale operator. Shale was deemed dead, pronounced dead. Under the last administration, we became the biggest producer of oil because of shale. Shale has huge resources, and a couple companies did go bankrupt because they over-leveraged, but Pioneer is the biggest. And if you look at it, it's not too far from its highs, and it looks like it's going to go. Shale is coming back, unless they screw it up again, and I wouldn't put it past it. But this can produce a lot of oil, 4 million a day or more. I think we were producing at one time, and that's a significant amount of oil. That made us a net exporter for the first time ever. All right, now the other sign of inflation here, which is starting to look the other way, are these tips. These are the 0 to 5 year ETF tips, and if you'll notice, it looks like it aborted a rounded top, and I'm guessing that it very well may have, and that oil and the coming shortage of oil is going to be right behind it, because it's a huge component of everything. It goes into everything. Everything's transported. Everything is manufactured. They all require oil. That's why it's so important to have it. That's why it is so stupid to just, buy votes with it. That's really dumb. I'm sorry, I'm going to say it again. It's really dumb. Vote out the incumbents. Okay, now, these are the tips. These are the bigger ones, the longer range ones, the more mainstream ones. And also, it looks like it has aborted a rounded top. If you look at it, it's actually, there's an arrow pointing to it. It could be going up, and it could be going up because of oil. And it's not going up because of food, I can tell you that. Because we're about to show you food. Invesco Agriculture Fund has not come back. It has stayed down. And most of the food products that I'm about to show you are going nowhere, despite the global food shortage that we're all going to suffer from and starve to death. While we're all obese as hell, we're going to starve to death. Corn, it bounced a little bit. That kind of move like that, it's going to take it a while. And corn is obviously in plentiful supply, because look how much it's fallen down. All of the gain that it had during that spike, it gave up in like 2 days. It gave up almost immediately. So, and then we've got soybeans. These look like a little better pattern, but again, they have to break out above that horizontal line, and then we can rethink it. But right now, I'm still going to stick with the fact that food products are not really likely to soar. And here's one of my favorites. I haven't had this in a while, but this is sugar, and it's broken down too. And I'm going to sing, sugar, do, 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 honey, honey. I love that song. I hate to see sugar go down, because, actually, I don't mind sugar going down. But, it's so important. It's everywhere, and it has held up relatively well. Another reason I believe that food will not be the driver of inflation at the moment. Wheat also. Wheat was supposed to disappear from the face of the earth. It hasn't. And it is trading at or near its 52-week lows. Okay? If you ask anybody, they think, oh my God, wheat is trading at like $100, per loaf of bread. No, it's not. It's basically trading where it was trading a year ago. Okay, so now the base metals, these are the, things like copper and building materials. They absolutely got pummeled. And they've had a tiny bounce. And this is not the kind of bounce that gives you any confidence that something good or something positive is happening on the economic front. This is a sign of absolutely the opposite. Copper miners too, very important. They're still trading low. They bounced a little bit, but copper is so important that it has got to go up a lot to show that the economy is going up, because it is so present in everything, including housing. Gold is another thing which is incredibly disappointing. I'll be the first to admit I have pounded the table for gold because we have such inflation. It should be going up. The fundamentals for gold are terrific, and for silver. The problem is the charts aren't. And just today, J.P. Morgan got sanctioned by the Department of Justice for suppressing the price of gold. All right? That's important. If you go into a coin store and you try to buy an ounce of gold, it'll cost you about $150 more than if you buy paper gold. Paper gold being futures or GLD, the ETF. And that's because physical gold is in short supply, so there's a premium to buy physical gold. If you buy paper gold, you have a contract, but it rarely does it result in the delivery of gold. So the same thing is with silver. Silver has traded below 22. It bounced a little bit. That's where we thought it would have, some support. It looks like crap. And to buy an ounce of silver will cost you $30 as a coin, whereas the price is now $20. It'll cost you $11 or $12 more than the paper price. That tells you there's a shortage, and the shortage is getting severer by the moment. Big banks, the reason they're not doing too well, broke out a little bit, but you have a flat yield curve, okay? Our yields go from about 2.9 to 3 all across the spectrum, so the whole thing is flat. And a bank lends at the short end. They borrow from the Fed. The Fed is basically the supplier of funds, and they lend at the long end. So there's not much of a margin. There's not many ways for them to make money, unless you're Wells Fargo and you steal money from me. That's the only way I know of how to make money. If you're a bank, steal it from me. Thank you, Wells. All right, J.P. Morgan, and here's another one. Premier stock, premier bank, going nowhere. That tells you something. It's going nowhere. You are not going to have a vibrant rally if financials do not participate. They are not. The REIT index is real estate. And, for a while it looked like, and I still do think that real estate is topping. It's not topped exactly. I don't know if it has, but it's bounced a little bit. But I still believe that real estate will go down. And here's why. As a population gets older and ages, which ours is, older people require less housing than younger people who are household formationing. They're forming households, getting married, buying houses, buying appliances. There's not that many of them now. They're not getting married. They're not forming households. They're living in their parents' basement, smoking weed and playing video games. So, right now, older people are going to be sizing down. So there's going to be pressure down on real estate for a long time. And I read today that the birth rate is so low now that it's going to be less than the death rate like any time now. I mean, basically, there is no gain in population, and that's a lot of how you get more GDP. You get people to buy stuff, and you just don't have them. And old people don't buy that much stuff. Let's face it, they have a bunch of stuff, so they don't buy it. The 5-year Treasury, now I said, before, lower rates because it broke down from this rounded top, but it also had an outside day up. So again, I'm starting to doubt the lower rates theory. and the lower inflation theory a little bit because it may not be as bad, but oil tells me it's coming and it still hasn't abated yet, and we don't have the production or the capacity to solve the problem. We can only conserve, and people don't conserve very quickly. It takes them a long time to do it. They will still spend exactly the same amount, drive the same amount until they can't afford it anymore. So these are now telling me that there might just be more upside in rates than I previously thought. We'll have to check it out, but it didn't look good. If you start looking, though, at longer rates, like the 10-year, it had an outside day reversal up too. And this one also, I'm wondering whether this is going to also start to break through its rounded top, because let's face it, inflation is still running at 9% according to the CPI and 11% according to the PPI. And if oil starts coming up again, it's going to be a problem. And there's an awful lot of things that are going up by amazing amounts. It's amazing that it's only up 9% when you see things that are up double digits everywhere. Here's the 30-year. This one is not as vibrant. This one gives you the long rates give you more of an indication of expected inflation and or growth. They're performing poorly. And so what's happening is the short end of the curve, like 2 years and under, is going up in yield, while the 30 years are going down in yield. Right now, the 2-year minus the 10-year, that's what's considered the benchmark of the yield curve. It's minus. In other words, 2 years yield more than the 10-year. That is a sure-as-hell sign of a recession coming. We already know we're in one. Although the politicians don't. We've had 2 straight quarters of negative GDP, and yet no one can figure out that we're in a recession. Joe Biden certainly can't figure it out because he's never taken an economics class in his entire life. But we're in a recession. Actually, we're more than in a recession. Jobs are now there are layoffs all over the place. So this argument that, everybody's employed. Not really. People just don't want to look for jobs because they are making less after inflation than they did a year ago. So they're not going to work for that kind of money. They're not getting paid enough to work. And so the way they calculate it, it looks like everybody's working, but they're not, and they're getting laid off. All right. FedEx is important because it is a transporter of goods and services. It actually doesn't look too bad, although it may have peaked now because it's gone up to the upper end of its trend line. I'm going to guess that the economy is going to come down. This will come down with it. But if it breaks above that blue line, you have to start to rethink because it's so critical to the volume of goods that gets transported everywhere. UPS looks like it's in a bear flag. And another important company, and I'm going to guess that this will break down too, because while the stores are doing well, I have no idea how these people are managing to spend this money, because people I know just anecdotally are running out of money. They don't have any. They can't pay rent. And they're talking about stimulus bills again. Stimulus does nothing. Printing paper does nothing. Building goods does something. That's what makes you wealthy, not pieces of paper. Joe Biden. All right, Ford Motor. Now, this is interesting. Ford Motor broke out from a declining trend line, and one might think that EVs are back in favor. No. I'm going to show you that that's absolutely not the reason it broke out. It broke out because Ford Motor, the regular Ford Motor cars, are working. Part of the reason is people do not want to get stuck with EVs and not have enough power. And they're getting Texas grid has already been shut down a couple of times. A number of the grids are shut down because also they have idiot Bitcoin miners who basically waste electricity and generate no GDP. And I just, for the life of me, cannot understand that. And you look at this, and this looks like the regular car company seems to be doing okay. Now, Rivian is Ford's subsidiary that's electric cars. They own 10% of it. They're the largest shareholder, and it's gone nowhere. So it's not the electric cars pulling Ford up. It is the regular cars. If you look at GM's chart, same thing. It's going up, but it doesn't have big presence in electric cars. All right, Costco. I don't understand this chart, but this chart looks like Retail's on a tear. I really can't explain this. I'll just go with it. But this is one of the more positive charts I've seen. I told you there'd be some good news today. And this is some of the good news. We'll have to see how it goes, but it's had an incredible move. And Walmart, a little bit of a move, not much. So, you kind of have to temper your enthusiasm with those. And Apple had great earnings. It's either an upside breakout, but not yet, or it's a head and shoulders top. I'm going to guess it's a head and shoulders top. That's what I'm going to guess, because it looks perfect, and there's no reason that it should be going up if interest rates start to go up. The only reason they've been supported is lower rates help long-duration companies like stocks and tech companies. That's what helps them, lower rates. We're going to get higher rates, and I think we are. This is not going to help these guys too much. Alphabet had a bullish outside week, but no follow-through. And it had decent earnings. I don't know what's going to happen with this. I would not want to hold it. I would not want to sell it. I would just avoid it in general. But, this is actually one of the better companies out there that's not as bad of a value as most of them. Amazon had great earnings and broke out from its rounded bottom. So there are signs that some things are going well. And here's one of them. So as I look through these charts, I wondered, fake out or breakout? Fake out or breakout? What's happening here? And I'm still going to say fake out. I'm still going to say fake out because the bulk of the evidence is still on the fake out side. But if things change, and I've told you what some of those things are, then what's going to happen is we're going to rethink. And we're going to rethink it and make sure that we don't get caught short and stubborn like other people will, especially people who've held cryptos all the way down to nothing and still insist that they're the second coming of Jesus. All right. I think that's the last chart. So I want to thank you very much for tuning in. And, we're still leaning to fake out, but don't get too anxious to get in right now. I still think cash is king, okay? Because unless you have cash, when the opportunities really show up, all right, when they really show up, you're going to need cash to buy. If you're holding a whole bunch of stocks, you're just going to ride the same elevator down with everybody else. It's going to do you no good. So you have to go to cash. And I've done that personally. And, I don't do anything, I don't suggest anything that I don't do or would do. And with that, I want to say thanks again. Please like and subscribe. And look forward to seeing you next time.